the normal traditional system that tells you to go to school, get an education, get a good job, spend your time working at the same company for 40 plus years, pay off your student loans, and then one day when you're 65, you'll be able to retire. Like that.
Yeah, that's the play that people they don't even think that they just do that.
Again, most people don't think. That's why the book says Think and Go Rich. Yeah. Most people just go through the motions and they go every day just doing whatever the system tells them to do. And the system is set up not for you to win, but to keep the economy rolling.
What's up, y'all? Welcome back to another episode of the On the PRST Podcast. On this podcast, we connect with 6, 7, 8-figure earners that are movers, shakers, right? On the pursuit of their goals and dreams. And today's episode is an exciting one for me because we've been this almost a year in the making.
Yeah, since what, August?
Since August. Yeah. Since August. I'm not even sure how I stumbled on your Instagram. But anyway.
I think Shan's another podcast.
Nah, it might have been before that. I don't know. It was before Shan's joint.
Either way.
Anyway, man, I'll be networking and I'll be looking and I'll be finding people, interesting people. And I found this interesting guest, right? Now, what's interesting about him is he's been in the financial industry 15 years. Well, over 15 years?
15, 16, yeah.
Agency owner, Financial Hall of Fame.
Yeah.
Which is crazy. And he's a generational wealth breaker, I would say.
I appreciate that.
And teaching people... only tricks and secrets that were reserved for the 1%.
Absolutely.
You know what I mean? And now you're kind of bringing it to the mainstream. Bro, I'm excited to have you on the show.
Yeah, I'm excited. For
those that have not seen him on other podcasts, let me introduce you to Mr. Marvin Mitchell, bro. Welcome, man.
Hey, man, appreciate you having me.
I just got to ask you, why it takes so long to get you on a podcast?
Man. So my team will tell you, I am great at being a visionary. I'm great at being a CEO, giving directions.
Yeah.
Logistics, I'm horrible. If you reach out to me and you want to like get something on a calendar, I'll say, okay, let me look at it. Mm-hmm. But you might want to talk to my team. My team is probably the best people to make that happen.
So I think that's a good lesson for people that are watching, right? Yep. Because it just shows you that you got to be persistent.
Right.
And some people, like, if you reach out and someone's response and then they don't follow back, some people would take that a certain way, and they'd be like, all right, well, he ain't hitting me, well, he ain't interested, or whatever the case may be. So for those of you guys that are watching and paying attention, you just got to be persistent.
We're talking about persistence. Like at the time of this recording, you all, it is probably midnight or 11, somewhere around there in Vegas.
Yeah.
Like, I'm about to go out, but he was persistent. He said, hey, bro, we got to get you on this podcast. We're both in Vegas right now. So we're sitting here on a red couch doing a podcast right now. So, man, persistence wins.
100%, bro. So I really want to talk to you because, you've been sharing an amazing message.
Yep.
Right? And that message is about infinite banking, which I want to definitely have you touch on for those that don't know what it is and haven't heard of it. But I kind of want to talk about that gap, right? Because, if you're setting up the infinite banking strategy, right, there's a threshold period or there's a period in which you got to kind of load up the account because you can't borrow from yourself yet. And for those that don't even know what that is, we're going to talk about that.
But can we go a little more conceptual first?
Yeah, let's do it.
All right. We're going to talk about the infinite bank and all of that. That's all important because this whole topic is about becoming your own bank, how to be a wealth creator, how to make sure everything can, work for you to multiply your money tax-free. We're going to talk about that. But first, we got to go down to the basics because becoming your own bank is more than just a product.
Yeah.
Becoming your own bank is a whole philosophy on how you live your life financially. Like, it's like, how do you spend your money? Do you view yourself as being a person trying to get out of debt, being a saver, or do you view yourself as a wealth creator? And are you doing the things that you need to do in order to be the wealth creator? So there are 3 different types of people and mentalities when it comes to money. You got a debtor, you got a saver, and you got the wealth creator. The debtor, they're going into debt. Their number one goal is to say, I want to be debt-free. I want to be debt-free. So their mindset is only taking them as far as getting to zero. Because that's all debt-free is.
So they're always looking to just get to zero.
Get to zero. Like, I'm not looking for people. That's not my type of client. I'm not looking for people who are looking to just survive. I'm looking for people who are looking to thrive.
Yeah.
So I want to create that thriver's mentality. And the savers is the next step. The problem with the saver is all they're doing is saving. And then when it's time for them to go out and purchase something, they're going to pay cash. And that sounds great, right? I'm not using debt, I'm paying cash. But let me tell you this, you actually finance everything that you buy. Let me explain. So either you're paying a financial institution 5 or 6%, or you're losing the 5 to 6% that you could have earned had you not spent the cash.
Yeah.
It's called opportunity cost. So you might as well use the debt if you losing the interest anyway when you pay the cash. And now you got to rebuild that cash. And the worst part about being only a saver is that savers don't get rich. Savers maintain, and maybe one day they can retire and pay the government 50% of their money in taxation, but savers don't typically get rich. People who use debt as a tool get rich.
So you're saying you can't save yourself to wealth is basically what you're saying.
You can save yourself to being comfortable, but you can't save yourself to generational wealth. So like, what is it going to be? Do you want to maintain, or do you want to actually go to the next level and expand? And the problem with being a saver is that you develop what's called a scarcity mentality. Like I have clients in my firm that have $3 to $5 million in assets, spending no more than $40,000 a year. But because they developed this scarcity mentality all of their life, they're afraid to even spend the $30,000 to $40,000 because they think that they're going to run out of money. Because what we don't understand is if we're thinking a certain way for so long, you're not just going to retire one day and snap out of it and say, now I can spend a lot of money.
Yep.
You're still going to be just as afraid to spend that money because you trained yourself to think, I can't afford it. And your words are powerful. The Bible says, speak those things that are not as though they are. Death and life is in the power of the tongue. So if you're saying to yourself all the time, I can't afford it, afford it, you're not going to all of a sudden be able to afford it. So can I tell a really quick story about the saver?
I would love it, yeah. Go on.
I was a saver. That's how I know. I was a person who drove the same vehicle for 8 years, a Ford Taurus.
I was going to say.
Remember that?
I remember that story,
I was a person who lived in a small house and told myself that I could never live in a bigger house because I'm comfortable right now. I'm a minimalist. I used to save, look at saving and couponing. But you know what? I still wasn't rich. I still wasn't getting ahead. I was saving, but I wasn't making any money. I was so focused on saving that I wasn't focusing on getting rich.
Yeah.
So the problem with that is me being a saver, I had that I can't afford it mentality, which caused me to not go for anything. I thought that I had to delay gratification so that one day I would be able to do it. But then I learned something triggered in me. And I thought, you know what? It doesn't have to be an either or.
Yeah.
It can be a both and.
Yeah, both and, yeah.
I can do both. I can enjoy my lifestyle now and invest.
So what was it about that triggered that change in your mindset? Because I know there's someone watching this, listening to this, it's like, I'm feeling that way, but I can't see how I'm going to switch my mindset. Like, what was it?
Well, it kind of mentorship.
Got you.
It triggered for me because I started paying for coaching. I started paying for mentorship. And I happened to get a good mentor who explained this to me.
Did you still have that scarcity mindset? Like
no,
to get into the mentorship? Like, you know what I mean?
So to get into the mentorship, that was a big jump for me.
Yeah.
But I did it because I was at a point where like my business was like doing okay, but I was struggling. I was working so many hours a week. And I said, you know what? I'm either going to quit or I'm going to try to figure something out and do it. So I went ahead and paid for a mentorship. That was the biggest. It was at the time, I say cheap because then it wasn't. But now looking back at it, it was only like $1,000 a month.
Yeah.
So the grand scheme of things, it was cheap coaching, but at the same time, it got me over that hump of thinking that. So I began to like go to open houses to try to expand my mind. And then I read the book Think and Grow Rich.
Yeah, for sure.
Again, because I had read it before, but it didn't hit me the first time like it hit me this time.
Yeah. I mean, they say you should, read things a couple times because you're going to get something different from it. And plus, you'll be in a different place. And
you want to know the thing that I did, the one other thing that I did to get me out of that mindset is I did a vision board.
Yeah, those are heavy.
Yeah,
those are heavy.
On that vision board, I remember I put a Range Rover on there. Range Rover, peanut butter seats. It was like awesome. Recliners, everything that I would want. Like,
did you cut it out and everything?
Yeah, I cut it out. I put it on there. Yeah. I did like the whole vision board. I still got it. I did the whole vision board. And then what happened was one day I went to go look for the Range Rover, and I was gonna buy one, and I was just gonna buy a used one. But then, like, it was like $100K or something like
for
that.
the used.
I was making about $108,000 that year. It was $100K for this used Range Rover. Then I thought, like, I was literally about to sign the papers, and then something stopped. It's like, nah, That's not on my vision board. This ain't the exact Range Rover on my vision board. So I told him I was going to do a custom. So that also gave me time in my mind to feel like I could afford it, because it was like 6 months. It was like 6 to 8 months before this thing could actually be designed.
So you had time to get the bread right.
So I had time to get the bread right. So what happened when I got that Range Rover, I finally got it. And the thing about it is I said that, well, I'm still going to drive the Ford Taurus, because I'm only going to keep the Range Rover for a short amount of time. I'm only going to keep the Range Rover to drive it for special occasions, and I'm going to drive the Ford Taurus. I never got back in that car again. Never. I never got back in that car because the battery died 3 times, and because I started to feel good riding around in it. It started to expand my mind, make me feel like luxury. Had peanut butter interior just like I wanted. It had the ice cooler, it had the massage seats. It made me feel what luxury actually felt like. And it wasn't a bad thing.
What's up, y'all? So I want to take a second to speak to my creators. So whether you currently got a podcast or think about launching a podcast, maybe you got a YouTube channel and you think about launching a YouTube channel. Here are the facts. Did you know that 9 out of 10 creators actually quit because they don't have anyone to hold them accountable? That's why all you need to do, right? Click that link below, join my Action Takers community, because not only are we gonna hold you accountable, we're gonna teach you how to execute at a higher level. Plus, give you access to principles and strategies to grow your mindset and generate more revenue. So what are you waiting for? Click that link below and join one of the fastest growing content and accountability communities, all right? I'll see you on the inside.
You don't have to feel bad about wanting something nice. A lot of people feel bad because they want something nice and they think they're a bad person because they want something nice. There's nothing wrong with that. If you look back even in biblical times, they had houses made of gold. Those were nice things, and they shouldn't be ashamed of those things. So as I did that, like, it really expanded my mind so much. That was a year that I went from $108,000 to being a millionaire, because I began to think bigger and think of ways that I can expand and multiply my money. So I take those same principles that I learned and I teach other people how to do the same thing. How to, number one, it all starts in the mindset, how to expand your mindset where you feel like you are worthy, because you are worthy of it. A lot of people don't think they're worthy of it. And then number two, how do you do both? How do you turn a luxury item, if you have a luxury, from a liability to an asset and continue to make money?
So that's something I want to touch on too, because it was a clip in a video that you did with Shans that talked about that. And I want to touch on that because that had an impression on me too. But you having that shift in your mindset, right? Did the work ethic change? Or, you know, from you jumping to that 108 to that million? Or just the mindset and strategy?
No, I'm glad you said that. My work ethic was always high.
That's what I was thinking. Yeah, that's what I was trying to allude to.
So the thing about it is we got it all backwards. We think that in order to make more, you have to work harder and you have to put on more effort. Mm-hmm. Actually, to make more, you got to put in less effort. Like, you have to force myself to put in less effort. So for me, to give you an example, I was doing 80 presentations in my local area per year. I was doing 12 client events per year. I was doing 8 to 9 appointments per day. Just me. I had a small team that I didn't have time for. So it was hard for me to even keep my employees because I never was able to check in on them. I never was able to do one-on-one because all of my time was meant doing meetings. Like, my team knew that if they didn't catch me, they weren't going to catch me for the beginning of the day. They weren't going to catch me for the whole day because I had meetings back to back to back. I was stressed out. I was overwhelmed. It was tough. One year,
and this was just getting to 108 after doing this.
This is getting to 108.
Yeah, with all this work.
And that's how stressful it is with all that work. But to understand that you can't do the same thing to make $1 million than you did to make 100.
For sure.
So in order to make $1 million, you can't think about, like, how much more work can I do? Because when I went to my organization and said, how can I do more? They told me, do more seminars.
Yeah.
It's like, well, I did 80. How could I do more than 80? Like, and then I'm looking at, and get this, you all, if you're looking to follow somebody, look at where they are, not just how much money they're making, but the lifestyle that they have. And ask yourself, is that what you want in 20 years, if that's what it is? All of the people who was the top producers at this one firm that I was a part of, they were making a lot of money, but they were walking around with, like, breathing machines and defibrillators and different things like that, like struggling, looking like they were strung out on coke. Like, it was just crazy, right? And I had to ask myself, I said, I don't want that.
Yeah.
I don't want to do this. So what can I do? The only way to do that is that I had to learn how to step back and work less and learn how to delegate and train.
Yeah.
So instead of me saying my job is to be a financial advisor, to sit down with my clients and helping to serve them, which it is, but now my main job has my job function changed.
Yeah.
I still own a business, but now my job function is, my job is to market, and my job is to be the visionary of the company and to train. So I don't care what you do. Here's a lesson. I don't care what you do. You're not in the trucking business. You're not in the vehicle business. You're not in the furniture business. You're in the marketing business. You just happen to do that.
100%.
And if you take it to a whole nother level, you're not just in the marketing business, you're in the marketing and training business, because your job is to train people to duplicate what you do so that you can use other people's effort for the benefit of them, but also for the benefit of you. So I can step aside. So now I'm going on vacation all the time. I'm leaving the company behind all the time.
That's why we could never get an interview, because you've been on vacation.
I'm everywhere, right? And guess what? You would think that, man, the business has to be struggling because you're not there. You're never working, it seems like. But I am working, but I'm working with my mind.
Yep.
And what I'm working with now, my business has actually doubled, on its way to tripling. And I'm working, instead of 80 hours, I'm working like 30 hours. Like, I'm working a lot less time. I'm making a lot more money because I've learned that principle of leverage.
Mm-hmm.
So leverage is the biggest thing. So there's three things that you want to do. You want to be able to leverage other people's money, which we've all heard of. But what a lot of people haven't heard of is other people's systems.
Yep.
Other people's stages.
Mm-hmm.
So a lot of people are saying like, oh man, I want to be one of these influencers and be able to make all of this digital money, but I don't have a following. Like, less than a year ago, I had less than 2,000 followers.
Yeah, I remember that.
Most of the people, you remember that?
I remember that.
You was
We talked a while.
Tapped in even back then.
Yeah.
So I went from 2,000 to now, in less than a year, I think as of the recording of this, over 37,000.
Mm-hmm.
But the 37,000 are all organic, and I found out ways to monetize that 37,000. So, it's all about leverage. So other people's money, that's where the insurance comes in, and that's how you become a wealth creator. And that's the third one. I talked about the debtor.
Yeah.
I talked about the saver. Now this is the wealth creator. The wealth creator, they don't use their own cash for a big purchase. Maybe if they're going to the store and swiping just like for some gum or something, but for a big purchase, they're not using their own cash. What they're doing is they're funneling their cash to a wealth creation fund, which is the insurance product that I'm going to talk about.
Yeah.
The wealth creation fund, once it hits that account, it's going to continue to grow tax-free as if they never touched it. They have the ability to borrow against that.
Mm-hmm.
Now that money is still growing. Now they go out and buy an asset. That money is still growing. And now they funnel the money they're making from the asset back into the insurance fund. So their money never leaves their economy. It just continues to grow instead of losing it and needing to build it back up, losing it and building it back up. It's literally the difference of doing the exact same thing, spending the exact same thing that you're already spending, but just doing it in a more unique way. So you're not decreasing your lifestyle. You're not going on a strict budget where you can't spend any money. In fact, you're going to have a better lifestyle because a lot of that money that you've lost unknowingly and unnecessarily due to things such as taxes, you're able to recoup if you learn these strategies.
So let's break that down, because I know you probably went over a lot of people's head real quick.
Yeah, that's fine. Yeah. I'm going to break it down, but I just had to give you out a concept.
So what's the strategy? Yeah. And then what are the products?
Yeah. So, okay, the mindset of a wealth creator. So we're talking about a special way to fund life insurance. Now, I want to make sure I reiterate that. A special way to fund life insurance. This is not the going to your local agent and just saying that, well, I want a permanent life insurance policy, because they're going to fund it more so for the death benefit instead of for the life benefit. But when you do it, when you structure your policy, you want to do the opposite. You actually want to get the lowest amount of death benefit as possible, because then you'll get the highest amount of cash value, which is what you use for the wealth creation fund to borrow against. Now, you might say, well, okay, if this, it seems like everybody should know this, right? Mm-hmm. Like, I'm talking to all my agents. Nobody ever told me this. Why haven't they told me about this, right? Well, the reason why they haven't told you about this is because it's hard to get a man to understand something that their pocketbook depends on them not understanding.
100%.
When they structure it the regular way, they get 70% more commission. When you structure in a way for the lowest death benefit and the highest cash value, they make their commission on the death benefit, not the cash value. So they actually take a 70% cut.
Yeah, I was going to say, so they're incentivized to do it not how it benefits the consumer.
Well, it's a conflict of interest. So imagine I just want you to imagine even yourself, right? Because I had to like battle with this for a minute, and ultimately I decided my integrity for myself is more important, because it's not ethically actually wrong to structure it the regular way. That's how they all do it. But it takes a whole lot of guts to say, I'm going to take 70% commission and do this the way I believe is right for the client. Because, all right, if I'm sitting here and I'm writing a policy and I know that my commission, if I do this way, is $10,000, they're not going to really know.
Yeah.
It's not illegal. It's an insurance policy, right? They need insurance, so let's structure for the death benefit. But if I went deeper and I explained to them that we're going to actually accelerate your cash value, now my commission is only $3,000. I just took a $7,000 loss. Now that's just on one client. Imagine if I'm taking a $7,000 loss on 200 clients throughout the year. Now I'm talking about costing myself millions of dollars potentially for doing this particular way. So the reason why we do it the right way is, number one, I believe in reciprocity, right? If you give to somebody, you do the right thing is going to come back to you.
Yep.
And look at what's happening right now. This message is really just spreading all over the world. Like, we've been on several podcasts, including yours. We've been on TV. We've been on like different shows, radio shows, just everywhere spreading this message. And now we got more people. We had to hire a lot more people. We had to bring outside people and train them on the team because it's spreading so fast and we're getting so many appointments for it.
So how long does it take someone to tap into the cash value to utilize it? So if I set it up, right, how long do I have to wait, for it to be seasoned or for me to be able to access and start browsing against it?
Good question. So you planting the seed. So when you plant the seed, you got to give a chance to harvest. However, it depends on which one you get. So there's whole life and there's index universal life if you properly structure it. Whole life, you can borrow from it only after about 30 days.
Wow, that's fast.
Index universal life probably takes a couple years because it takes the negative side of an index universal life. It takes a little bit longer to build up. The positive side of it is that you get a better long-term investment return. So I tell people which one is for you. Yeah. Number one, it depends on your situation. Are you looking to borrow it quickly, or are you looking to let it sit for a minute and let it build up before you start borrowing? Third thing is that it doesn't have to be an either or. It can be a both and. Like, I own both whole life and index universal life. And actually, I still own some term. So I own, like, if anybody tells you there's only one right way to do insurance, like you should only do whole life, or you should only do index universal life, or you should only do term, they are doing that what's in the best interest for their commission with the company that they work for. They're not doing what's in the best interest for you. Because quite frankly, there's never one product that fits everybody, single person.
Yeah. So people should have multiple policies.
Well, it depends on how much you have to invest, right? Yeah. So if you got somebody coming with $500 a month and that's all that they have to invest into this cash value, it don't make sense to say, well, let me put $100 a month here and $100 a month here. But then if somebody come in with like, I got $20,000 I want to put into this, then it might make sense to kind of split it up and break it up. So again, you don't want to spread yourself too thin, but at the same time, you want to be smart about it if you come in with a bigger amount.
Should everyone, in your opinion, have some type of insurance coverage?
Oh yeah, definitely. Well, here's the thing. Some people don't need it.
I mean, one of the things that pains me, I guess this is why I'm asking you, is when people pass and then they got to do the GoFundMe.
Yep, but
you know what I'm saying?
Yep. Here's the thing. This is what works well for me. This is why we've been able to like blow up when it comes to the infinite banking, because exactly what you just said is how most insurance agents try to sell life insurance. Most insurance agents try to sell life insurance and say, "Oh, you could die any day." And these are all true, by the way. It's not like they're just false. But at the same time, what's going to motivate you more? If somebody said, "No, you need to get this life insurance now because you don't need to start a GoFundMe. I don't want to see another GoFundMe account." The only time people are really motivated to take action is when somebody died. Yeah. And then they're like, "Dang, that person just died. They need to GoFundMe. Let me go ahead and get me some insurance." And then they're thinking about minimum. Let me get the minimum amount that's going to pay for this particular funeral. Yeah. What we do differently is we teach people how it can be beneficial, how you can actually love getting life insurance because it's benefiting you during your life. But guess what? It's still insurance. So by default, if something happens to you, you're still good. You're taken care of. So it's like it's a different way. It's like I'm actually presenting life insurance to you from a standpoint of how can it benefit you today?
Yeah.
You got to work with the human nature of people. Human nature is they don't think long term, and that's okay. But let me show you how to make this money work for you the short term. And then by default, God forbid, should something happen to you, your kids are taken care of.
Yeah.
So some people don't need life insurance either because they make a lot of money, they make good money. But then I tell it this way. Warren Buffett doesn't need life insurance. Jeff Bezos doesn't need life insurance. Bill Gates don't need, Elon Musk don't need life insurance. But why do they all have life insurance? I want you to seriously just think about that for a second. Why do they have life insurance when they worth millions, billions of dollars? They have life insurance because it's a shelter for taxation.
Mm-hmm.
They can leverage it and borrow against it without needing to go to the bank to buy properties and buy investment activities. They get to fund it through a trust, which means now they get to do an irrevocable life insurance trust where that money could actually pay for their estate, because rich people pay high estate taxes if they die, 50-something%, and it skips taxes if it's all tax free as a death benefit. So it's tax free when it grows, it's tax free as a death benefit. So they use it because they don't necessarily need it, but they want it. So what I try to do is teach people why you may not need it or you may not think you need it, but this is why you definitely want it. And that's why we sell more life insurance than most people that I know.
Yeah. So again, I mean, you're sharing that because again, it's like thinking from the wealthy perspective.
Yep.
Like that's their mindset. So so if they're using it as a tool, like you said, shelter for taxation, and then the leverage play, which is huge, right? They're never really using their own money.
Correct.
Right?
And I want people to understand. I know I just talked about super wealthy people.
Yeah.
And some objections that we get sometimes is, but they're already rich. So of course they can do that. But they say, well, this isn't for people unless they're already wealthy. So I'll go back and say, actually, this could be for an ordinary person as well. If you can afford, if you're saving in a 401k already, that's a whole nother story about the financial system. But if you sell into something like that, then you actually will benefit yourself from doing this, even if you can only do, let's say, $500 a month. Something like that, because then you're building it up and you're building this financial fortress up over time. And it may not build up fast, but guess what? It snowballs throughout time. So even if you don't have $100,000, $250,000, $1 million, this still could be for you if you structure it the right way.
Let's use a real ass example, right? Because I have an IUL. My period that I have to wait is like 10 years. So before I can tap into
10 years?
Yeah, I think mine is 10.
Who the hell did your IUL?
Yeah, exactly, right? I think mine is like 10.
What company is it?
It's a nationwide joint.
Oh, hell.
Yeah, it's a nationwide joint. So let's use me as an example. So I got that. That one's 10.
Sorry, bro.
It's all good. So we gonna fix it. We're gonna fix it. So what would you suggest? You know what I'm saying? So I have a product, right?
Yeah.
My period for it, the season's a little longer.
Yeah.
Right.
But maybe at the time, say, let me not.
So I think maybe it's like 7 right now. It's probably like 7 years.
Maybe you wasn't thinking about cash value. Maybe you was trying to get the biggest death benefit at the time.
No. I think it was. I mean, I heard of it, but I you know, it was before.
This is a good lesson.
Tapping into you. Yeah, that's why I want to throw it out there. Yeah. So
good lesson is that there are going to be people who try to get your business. They're going to tell you, oh yeah. You say something about infinite banking or something. Oh yeah, we can do that too.
Yeah.
Just because they say they can do it, they don't want to let you go because they like, dang, I'm losing this commission if I let you walk off. So they're gonna say they can do it, but understand there are certain things you got to look for if they're really doing it. If they're really doing it right, like without going into too much detail, I'll just give you a couple of things really quick. Number one is it if it's whole life, do they have what's called a paid up addition rider added to it? Do they have what's called a term blend? What a paid up addition rider does, it actually allows you, it allows more of that money to go to the cash value because you're paying up additional money That's why they call it paid up addition. Paying additional money to the cash value instead of the death benefit. There's also something that's called a term blend. So it's not term insurance, but the term blend allows the death benefit. It gives you a little extra death benefit, but it actually boosts up the cash value more than it boosts up the death benefit. So you want to boost up that cash value as much as possible. And if they're not doing that, again, every single little thing like that you add to it, paid up addition, term blend, it helps you, but it reduces the agent's commission. So most people are not going to do it. And every insurance company, they can't do it, even if they wanted to.
So I clearly need a new product, bro. Clearly need a new product.
I would say that's a great idea.
Clearly need a new product. Definitely want to be able to access it earlier.
What's up, y'all? It's Running Boy. Now imagine, right? You have a product or a service, and it can actually solve people's problems. It could actually literally help people, but you have so much anxiety or you're afraid to actually communicate what your product and service can do. Well, you know what? That's actually one of the main things that actually plays entrepreneurs, and that's called marketing. A lot of entrepreneurs are afraid to market or they simply don't know how. Well, join my masterclass, right? My Marketing Secrets Masterclass. I'm gonna teach you the fundamentals, and actually these aren't the fundamentals. These are actually secrets. These are actually hacks to help you communicate effectively how your product and service can be the solution to your consumer's pain, right? We're gonna go over consumer journey, client avatar, brand messaging, effective magnetic marketing, all these things to take your business to the next level, right? All you need to do is click that link below and join the Marketing Secrets Masterclass. I'll see you on the inside.
The big name companies, all these insurance companies have been around for like 100 years.
Yeah.
But the ones that advertise the most on TV, State Farm, Nationwide, like all of those big companies, unfortunately, they're not doing it. You want what's called a mutual company, which means it's a company that shares into the profits with you. It's called a mutual company. So companies like a mutual trust, a mutual of Omaha, like, different companies that are mutual companies. And that's for national. I like other companies for like Index Universal Lives and different things like that. So, but we trick because the biggest marketers, the reason why they're the biggest marketers because they collected 70% more commission, so they're able to take that money and market, so they can just get more people where they're not paying up, while they're not building up a cash value.
So they can get the Peyton Mannings and the Chris Pauls.
Exactly.
And all that, yeah.
So if you do this right and your cash value grows the right way, I'm gonna tell you the end game of what you can expect. I've been able to multiply my money over the past decade. I've been doing this. I've used it. I have owned 422 units of real estate, working on another big one that's going to add to it right now. I've used it to pay the down payment for my Lamborghini, which again makes me money.
Yeah. And I like that story too, because you talk about how you got it. Yeah. And you was thinking about, I
was going to rent it out, but then I started driving it and I fell in love with it. Yeah, I didn't even fall in love with it because honestly, I'm not a car person. Yeah. I know that's crazy.
Why didn't you want people to drive that one?
I didn't want them to drive that because the first week that I got it, I made $150,000 because 27 people direct messaged me and said, "Do you have a mentorship?"
Yeah. My broker, that happened to my broker too. Like he got a Ferrari, so there was a couple of agents. He was a mortgage broker. Right. A couple of agents that was just not really messing with him. Yeah. You know what I'm saying? He was doing cool, 6 figures. I think he was doing like 250. And he always wanted a Ferrari. He could barely afford it, but he was able to get it. Yeah. I think he said his payment was like $2,500 a month. He put down like 30 bands for it. And then he said as soon as he got it, he got like 3 deals in that week. And, he had enough money to pay off the car for the rest of the year. But there was one agent, real estate agent in particular, that wouldn't give him no time of the day. And he started just throwing him deals. It's crazy, right? Mm-hmm. I mean, people look at you different. And I thought, like, to me, remember, Lamborghini wasn't anywhere on my vision board. I could never imagine that. My vision board was the Range Rover. So when I got the Range Rover, it's like, that was my dream vehicle. That's all I could think of at that time. But the Lamborghini is different. Yeah, I'm with you. Driving that Lamborghini. I was driving the Lamborghini the first day I was driving it in St. Louis. I was driving this thing in St. Louis. That's where I live, between St. Louis and Atlanta. So I'm driving this thing in St. Louis, and the first day, the president of the Lamborghini club saw me driving a Lamborghini, stopped me, and told me about an event that was going on for Lamborghini drivers only. It was at this huge, like 20,000 square foot mansion. I go in there, it's like literally mayors and it's doctors, the most prominent attorneys, like football players. So you want to have that access without the Lamborghini?
that Lamborghini, the access that it gave me, in the people, in the respect that it gave you, apparently, for people wanting to, taking you serious because they can see tangible, pay for it. So, like, you can literally turn any liability into an asset. Like, I got a $2 million home that, I borrowed from my life insurance policy, got something that's called a no-doc loan, which don't have time to get into what that is, but it allows you to pay lower. I borrowed that from my life insurance policy, and I don't even live in that house. I don't even live in the $2 million house that I bought. Because the whole goal is now to rent it out because I can make $20,000 to $30,000 a month, and people buying it. People renting this for a day or two when they out. I pay $10,000 a month, so it's like a $20,000 cash flow. So the question is, it's like, do I want to even live in there? It's actually costing me $20,000, not just the mortgage
to stay there,
but it's costing me the $20,000 that I could have made had I not. Now, sometimes you just have to say, you know what? This is what I want. I want to live here. I'm not thinking about everything that way. But it's better if you can find ways to build passive income and other sources so that asset could pay for the liability.
So do you pull bread from the policy all the time to make your investments?
Yeah, and I pay it back. The thing is, the reason why I pay it back is that it increases your borrowing capacity. But you don't have to pay it back.
I was going to say, what happens if you don't pay it back?
It's not a bank. It's not like a bank where they're penalizing you. Yeah. It's not like a bank where they're telling you, if you don't pay me, we're going to take your home. We're going to do all of this. It's called unstructured loans, which means you never have to pay it back. The only reason why you do pay it back, it increases your borrowing capacity for the future. But if you don't pay it back, then it's simply subtracted from your death benefit when you die.
So hold up. You just made me think of something. So if I'm borrowing for myself, there's no credit checks, right?
Nope, no credit checks.
There's no income verification.
Nope.
And as long as it's growing, I can take as much. How much money can you take from it at one time?
As much as they allow you. So sometimes
is it like 80%?
70% of the policy, something like that.
So if you have your own fund, you can borrow money whenever you want.
Yep.
Past, once the
you got to build
season,
it up.
Once you build it up, you don't have to. It don't matter what your credit score is.
Right.
It don't matter how much money you make.
True.
And you can borrow from yourself, and then you can make a play to make you some money.
Let me tell you two more plays. Well, let me first a concept. Let's say we got $100,000 into this cash value life insurance policy.
And how long would that take somebody on average to build that up?
It depends. I got people who say I'm dropping 100,000 in tomorrow.
So you could just drop 100 in there.
As long as you can do that for the next 5 to 7 years, because then you don't want it to be called a MEC, which is a modified endowment contract, which is another technical term. But basically, what all that means is that once you fund it, you want to be able to fund it for 5 to 7 years
at the same amount
or more.
Okay, so you got a minimum at that point. So a minimum.
No, I'm saying not funding more, like that same amount.
Got you.
There are ways, and again, I don't want to get too technical, but that's why I do have a training class and a mentorship, because some of this stuff, like you need to understand. Like there are ways that you can actually, if I'm putting $100,000 a year in, that I could if I pay only $30,000, if I fall into a hard time and I just add an extra $1 to pay off the paid up addition rider, that I'm good for another year. So there's some flexibility in there.
So you could drop that in there, and then what can you do?
So you can borrow against it like within 30 days. I mean, you can go out. Oh, what I was saying is, if you have $100,000, if that $100,000, remember, let's say it's earning 5%. If you don't borrow from it, it's worth $105,000, right? Because it's $100,000 earning 5%. That's $5,000. 1 year later, it's worth $105,000. If you do borrow against it, the next year is still worth $105,000. That don't change. Why? Because you didn't actually withdraw the money. You just borrowed against it. So it's like you borrowing like equity from the house. The house still grows and appreciates. So when you're borrowing against this money, it still grows. So my question for you is, if it's worth $105,000 if you do borrow against it, and it's still worth $105,000 if you don't borrow against it, why wouldn't you borrow
against it?
See, most people, they don't borrow against it at all. They buy the policy because of the concept. This is why I say it's not a product. It's a mindset shift. They buy the product because of what the agent even tells them that they can do, but the agent's never around to actually coach them and tell them how to do it. And they don't understand how it actually works. So they sit there and they say, this ain't a bad investment. I should have just bought term and invested the difference. Well, the reason why it's a bad investment because you didn't do what you were supposed to do because nobody taught you how you were supposed to do it.
So now you're just having your holding and you're not really leveraging and taking advantage.
So now that I know that it's going to grow the same whether or not I borrow against it. Let me tell you what I was able to do. So 2 things.
When did this click for you? Like, when did you was like, oh yeah, I can, like, you know what I'm saying?
Bro, I had to spend a lot of money and a lot of time I found old, rich white people who was doing this, to be quite frank with you. And I sat down with them, and I went out to Atlanta and Vegas and Los Angeles, and I got into the rooms. I was the only black person. I was probably 20. Everybody else was at least 50 years old. And I sat there and I was a student. I said, I'm going to learn everything that I can. I read all the books about it. I wanted to find out not just what my financial industry was teaching me, because they were part of the system too. Yeah. I wanted to find out what the heck were actually rich people doing. And I found out that their system was completely different than any system that we did. So, for example, I was able to borrow $100,000 from my policy after I built it up. And when GameStop was going down, I did an option play, and
I heard that.
It made me like $300,000.
Crazy.
Well, you say, well, if I lose, won't I lose $100,000? Yes, but I don't want to lose $100,000. But if I lose it, remember, it's still in my life insurance policy, growing as if I never touched it. And if I don't pay it back, it's simply subtracted from my death benefit when I die. Yeah. Now, I prefer to not lose, but if I lose, it's not the end of the world. Whereas if I was using my cash, that $100,000 will hurt.
So that's a hell of a safety net.
It's a big safety net. Another thing that's very unique about this is that it's interest only. You don't know what that means yet, but interest only means that they charge me no interest. It don't hit into the 13th month, which means let's just say I borrow from this policy that's growing tax-free as if I never touched it. I go out and I flip a property. I flip that property 6 months. I get my money back. I pay back the insurance policy. Not only did I make money off of the flip, I was making money off the insurance policy as it was growing, but I also had to pay no interest on it that's subtracted from my death benefit.
So you get to grow the policy. The money continues to grow. Yep. You can borrow from it pretty much whenever you want.
Yep.
And it's interest only, and you basically borrowing from yourself.
Absolutely.
That's a hell of a play.
Yeah, I mean, and just to clarify that, it's like you borrow from you. Technically, if you want to get technical, you're actually borrowing from the insurance company and they're using your policy as collateral, but just the technical term. But yeah, I just want to make sure if any compliance people watching, I had to make sure I made that clear. And you don't borrow from your death benefit. You actually borrow from the cash value that you actually build up. So let me make that clear too, just in case y'all compliance people watching. But yeah, that's how that works.
So you really change people's lives with this, bro.
I do. Yeah. Bro, I didn't realize how much right now as we film this, we're at a conference. And I done had at least 100 people. And I'm not even exaggerating, Tip come up to me and say that I didn't even know was watching my stuff. Came up to me and said, the way I think about money and talk about money has changed their life. Financially.
Yeah, because you can't unsee it and unhear it. So after you done showed it to them and told them about it, you just changed somebody's whole mindset, bro.
Absolutely. Yeah. And once it shifts, like you said, you stretched it out, it's hard to go back. Like this financial system right now is hurting a lot of people because I think we're in trouble. I mean, I think the fact that younger people, they're not saving as much as the older generation, but not only are they not investing and saving as much, pensions are not going to be around like it was for the older generations, which means that you're much more, you're reliant upon your own savings. Social Security is not even going to be promised to be around. Like by 2034, Social Security Administration say the general fund is set to kind of run out. So they're probably going to have to do some things such as extend that age, raise taxes to keep the Social Security going. So taxes are probably going to go up in this country because they're historically low right now. They're probably going to go up. So the younger generation is in trouble. If we keep following that same financial system that 70% of people statistically run out of money in that particular system, you got student loans even, you got all of this stuff, you better change the system that you're doing. So I want to have a wealthy system versus the normal traditional system that tells you to go to school, get an education, get a good job, spend your time working at the same company for 40 plus years, pay off your student loans, and then one day when you're 65, you'll be able to retire. Like that.
Yeah, that's the play that people they don't even think that they just do that.
Again, most people don't think. That's why the book says Think and Go Rich. Yeah. Most people just go through the motions and they go every day just doing whatever the system tells them to do. And the system is set up not for you to win, but to keep the economy rolling.
So how are people going to get in contact with you? What do they got to do to get access to this information?
Well, two things. The first thing is that I do what's called a 5-day challenge, right? Well, first of all, let me give you my Instagram. It's Marvin Mitchell Official. Marvin Mitchell Official is my Instagram. Second thing that I want to do is I want to make sure that, if you go to my Instagram profile, click the link in my bio, you'll be able to buy my book, which is Become Your Own Bank. I got an ebook. You'll be able to sign up for any programs I got going on. And then the third thing is that I actually have what's called a 5-day challenge. And this 5-day challenge is what allows you to go through with me where I talk to you step by step for 5 days, do Q&A if you're VIP, help you to understand this and take you to the next level. And there's 3 goals. I want to help you to make more money. I want to help you to multiply that money. And then I want to help you to manage that money. And you're going to learn all of those things throughout the course of this particular time frame. These 5 days is virtual. It's do it via Zoom. You just have to go to mypath2prosperity.com. That's MYPATH 2TO prosperity.com. So with that being said, man, that's how you get in touch with me.
And then how often are you running the challenge? Is it monthly, bi-monthly?
Yeah, about every 6 weeks or so.
Okay.
Yep.
Y'all need to get into that challenge.
Yep.
At the very least, grab the book.
Yep, for sure.
You know what I mean? And because the traditional financial system, the traditional saving, that ain't it.
It ain't it.
So is this strategy, you feel like this strategy is something that everyone should be tapping into? Or at least learn?
Yeah, I say everyone, even if you're not tapping into, everybody should at least know what's out there and learn. And learn the game, because again, we don't want to be walking. Like the way that we manage money is so crucial, it's so important, because if you're not faithful with little, you're not going to be blessed with more. So at least you need to understand.
If you're not faithful with little, you're not going to be blessed with more.
Absolutely. You got to be faithful with what you got. So, yeah, with that being said, reach out, tap in. I'm here to help you. I'm here to help you to win. Follow me on the gram and let's see where it goes.
So my last 2 quick fire questions for you, man, is number 1, if you was going to make a school, right? If it was going to be the Marvin Mitchell school, right? What are like 3 pillars that everyone would need to learn?
You must already know about the school right? That's actually one of my goals, to start a school called Success High. So what the pillars are, first off, people, they're going to come dressed to impress for school.
So you're going to have a dress code?
People
don't be feeling dress code.
Okay.
You got top and bottom, or just the top?
Dress code, but you're going to feel the money later when they hit you.
I hear that. So dress code.
So the second thing is, it's going to be, there's not a lot of wealthy millionaire entrepreneurs that actually can speak to those people. So we're going to have like bi-weekly or maybe monthly, what do you call them? The rally, the pep things or whatever, where everybody gather together.
Pep rallies, yeah.
Whatever it is, but it's going to be a millionaire entrepreneur or somebody.
So you got millionaire rallies.
Yeah, that's actually speaking to them on a consistent basis. So basically, the third thing is they got 2 projects that they start in their freshman year that blossom through each particular year. One is a business plan. They're going to develop this business throughout these 4 years of high school. The second one is a community service project. So their goal every year, they build up on that. The teachers are trained to teach them to build up on that business plan, to build up on that community service project. So when they finish high school, obviously they can either pass it out, learn, because they're going to learn how to delegate it, or what they could do if they want to go to college or something, pass it off, do it later. Or what if they did an idea and that idea is making a few $100,000 by the time they even graduate high school?
Yeah, that sounds crazy.
Which is possible because they're getting all the skill sets. But if that happens, they can go to college if they choose to. But they already got themselves an entrepreneurship journey. And they learn the mindset of an entrepreneur and the mindset of somebody who gives to the community. So those are the 2 big major focus points that the school will have too.
Is this just going to be physical or virtual?
No, this is going to be, thinking physical.
Okay.
But that's a good point. I never thought about that, because when I had this idea, it's been for over a decade. Well, now with the way the times are moving, I don't know it, because we're looking at whole new ways and new ways to do it. So I don't know. I got to think about that.
And is it going? Do you have to pass the test to get in? Did you even get that far?
No. So there's definitely going to be different kind of tests, but they're going to be different methods of tests.
Gotcha.
Because not everybody's going to exceed on like a multiple choice and that type of thing. There's going to be actual different types of tests. Some might even be physical interview style questions and tests like that. But we definitely want to change the game on how great the school system works. And that's passionate for me, because I was getting all A's in the school system when in high school, thinking that I was doing well. My mom got married and I had to transfer to another school. And then I got all F's and D's in that school. And I realized how unequal the school systems are. And I definitely want to do something. And then they don't talk about financial literacy, entrepreneurship, communication, interpersonal relationships. Those are the things that matter in life, not what grade can I get on this math test. I got a calculator. What do I need to remember some kind of formula for? Yeah. But anyway, you got to do it to know for the standards. But at the same time, we want to take it to a whole other level.
Got it. And then the last question I have for you is, about, I guess really the undertone of the whole interview has been about mindset.
Yeah.
So, what are some books, programs, maybe something they can search on YouTube that'll help start planting seeds and seasoning people to start growing their mindset?
Obviously, Think and Grow Rich, I talked about that, but if you maybe look at Think and Grow Rich and you are a little intimidated by that, a short read is a book, it's one of my favorites. It's called Instant Millionaire. It's a very short fable, very short read, and it teaches you that you become a millionaire once you believe in that particular moment and start acting like a millionaire and you set the goals. So you can actually get that book, set all of your goals, the importance of setting goals. You will learn certain things to do. And that's the book that I read that really also catapulted me. Another book was 10X. Yeah. Because that got me thinking big. That's by Grant Cardone. When I read, my goal was 8 million. And then it grew to 20 million after reading that book. And I ended up hitting 24 million. So it's just thinking bigger is just critical. In assets, right? I'm not doing it in revenue yet. But
that's crazy, man. Well, bro, I want to thank you for your time. You know what I'm saying? I'm glad that we were able to get it. Yeah, just get it going finally. And then they're going to path2prosperity.com.
My Path to Prosperity. Not the number 2. Yeah. TO. MyPath2prosperity.com. Sign up for the challenge and follow me on Instagram and click the link and see what I got going on.
So make sure you guys tap in with my guy, Marvin Mitchell.
Appreciate you, bro.
Appreciate you. Get your mind right, man, and set up your future the right way and get access to this money that you can leverage right now. And get more cash flow, man.
Let's do it.
All right, so it's been another episode of the On the Pursuit Podcast. We will see you guys again. Follow my guy, Marvin Mitchell, and we out.
Podcasters, you do not need a crazy large following to make money. At the beginning of the year, I came across this crazy, insane strategy of how to generate revenue consistently and grow your show without complicated Facebook ads, affiliate marketing, or begging businesses to sponsor your show. This is by far the easiest way to generate consistent revenue and grow your show. And the best part, it's not complicated. So I want to give you 3 gems, 3 takeaways from today's video. Number 1, realize that your podcast is not a podcast. Your podcast is actually a media business. And as soon as you position your podcast as a media business, you will get access to capital. Number 2, you should create and sell digital products by leveraging each and every episode. Number 3, you need to create a direct and dedicated paid community of your listeners, supporters, and viewers. Now, when I say you don't need a large following to make money with your podcast, you don't need a large following to make money with your podcast. Now, if this seems remotely interesting, if this seems worth exploring, and you're ready to take your podcast into a thriving media business, my team and I would love to chat with you. So all you need to do is click the link below and book a slot. Let's see if you're a good fit for our program. Now, I gotta be honest, this program is not for everyone. And if you schedule a time and miss a time, we will not reschedule. We only wanna work with people that value their time and take themselves seriously because we also value your time. So let's see if you're podcast proof. My name is Vernon Boyd, and I'll see you on the inside.